the Money is made possible by financial support from Old National Bank and Chicagoans like you. Thank you.
Hello, welcome to In the Money. I'm your host, Kimberly Loftus, a CPA and financial executive who today is financially secure, but was not always. For the past few months, we have discussed quite a few financial topics, from the poverty mindset to budgeting and to crypto. But today I want to focus on money basics to make sure everyone is starting with a firm footing. Money is something we all deal with on a daily basis. Yet many of us find ourselves uncertain about the basic concepts that control our financial lives. Have you ever wondered what types of bank accounts are out there and which ones are best for you? Or perhaps you're ready to dip your toes into investing, but you're not sure where to start. Today's show will help you better understand the world of banking and investing as it relates to your own financial situation and empower you to take control of your financial future. This means understanding how checking and investment accounts work. For many of you out there, you may be paying for overdraft fees. This should not be happening if you understand budgeting and how checking accounts work. And that is why we are here to help you. Today in the living room, we will provide practical advice on finding the best checking accounts for you, avoiding fees, as well as the basics of investing. Come join me in the living room. Today in the living room, we have a guest who knows all about financial accounts from personal experience as well as a financial guru. She is going to help us explore the ins and outs of different bank accounts and help lead you to the right choice for your financial needs and situation. Please welcome Tish Griffin to In the Money.
Hi, thank you so much for having me here.
Thank you for joining us again. So in your work, you're a banker and you know a lot about checking, savings, and all those different types of accounts. We have a lot of people out there who what I would consider unbanked, meaning they go to the currency exchange or maybe the supermarket to cash or checks or whatever. Can you tell us what the advantages of or having an actual checking account with a bank?
Yes, so I have been in financial services for years and I've seen so many people start as unbanked, but then they kind of progress and change their way. And a lot of people, they are actually afraid of the banking system because they don't understand it and they don't know about it. A lot of people, well, I've had people say in the past, well, I don't trust the banks. That's a huge point that so many people make. But on the flip side of that, we need to see why it is that they're saying that. Most of the time they found out their family members or even themselves, something's happened where they've gotten fees from the bank, they feel like their money is gone, and it's just about understanding why that's actually happening. Because a lot of times we do what's called overdrafting our account. And when that happens, meaning we don't have enough money as we think, we're living above our means. And so now the bank will allow us to use that money, but they'll charge a fee. Now, when you're unbanked, you pay more for financial services such as the cost of money orders, sending money, even using the different electronic ways that people have nowadays, Venmo, Apple Pay. Those come with different fees attached. Cash App, those things, they still have fees in order to take the money from here to there or use it at different stores. Now with the bank, you know what those fees are, you know their policy, and they want to establish a relationship with you so that you can do other things with them, like get a mortgage, get an auto loan. So they're there for the long haul, banks and credit unions alike.
So are you saying, for example, when you say the long haul, you're building that relationship through the checking account or the savings account, and then when you come to get credit, they already have experience with you, and that's a good thing because they have a relationship with you.
Right. That's the best way that you can go, especially for establishing credit in the future, because a lot of times when you don't have credit, they're going to look at, well, why should we lend to you? What have you done? And with you having that checking account or savings account with that banking or financial institution already, now they have a history. They know your patterns. They know the likelihood of you putting money into your account. They see how you're paying your bills. And so they are more likely to lend you money first before you go anywhere else.
Okay. So going through some of the issues of why people don't get checking accounts through a bank. One you mentioned is overdraft fees. How can I stop getting overdraft fees? Or if I'm just a person who doesn't budget to every penny and it keeps happening to me? Are there ways that I can work with a bank or a product that's out there to help me not have so many fees?
That is a great question. A lot of banks, they don't want to see you overdrafting, even though they make money off of it. But a lot of times what they want you to do, reach out to your bank, pay attention to your account. There are so many different ways for you to sign into your account with the mobile app. If you have a tablet, if you have a desktop computer, they want to see you looking at it, paying attention to what's going through, and watch your spending. But most of that, avoiding overdrafts, starts with your own personal discipline.
And do they have like reminders? You can set up reminders, say, hey, if my balance gets to $100, for example, ping me, send me a text message to say my balance is $100. Do they have those type of tools available?
They do. A lot of times you'll find that in the account settings. If you're using online banking, you can go into a bank and set that up, and you can say, hey, I know myself. I want an alert every time my balance gets below $50 or below $100. And they'll help set that up. And that way you'll get those text messages and emails, if you like as well, sent to you for you to actually say, okay, I'm not going to overdraft. Then also another feature is overdraft protection. And that comes in a few different forms. And each bank is different as far as what they do. So when you're thinking about overdraft protection, the first thing that you would think is, if I am having a transaction, if let's say I'm paying my car note, but I'm also at the store, 9 times out of 10, I want my car note to go through before buying anything from a store, because that's the basis of what I need to work. So a lot of banks will let that go through. They'll send you an alert saying that goes through, and you can attach a separate account to that account so that you can take money from one account, let's say your savings account, and putting it your checking to cover that. You can also cut on the same protection to say, don't let any drafts go through or anything come out of my account if I do not have the money. Now that's smart, because you know yourself and you know what's at risk. So you're more likely to keep that money in your account to avoid those types of fees, charges, and any backlash from, let's say, your lenders or creditors may have from returning that item, from the bank returning that item as well.
Okay. Now, what about the other thing that people don't get checking accounts for, which is a trust factor? How can we give people more comfort that their money is safe?
People are really saying that, well, I've switched to Venmo or PayPal. But the banks that are there, they offer an extra protection and guarantee through what's called the FDIC insurance. They're all insured either with FDIC or NCUA if it's a credit union. With that being said, that means that no matter what happens, you're putting your money into that bank. Your money is safe, because if something were to happen to that bank, you would still get your money back. And that insurance each bank has is up to $250,000. Now, when you get over that, then it is a good idea to get a different bank, another account at a different bank. So that way you're protected. When you put your money into Venmo, into PayPal, that money can be gone any given moment. And there's no way to get it back.
So am I paying for this insurance? I mean, how am I getting this insurance?
I'm glad you asked that too. Each bank has that insurance, and that is a requirement for them to actually operate through the Federal Reserve. So with that being said, do we cover the cost for those? It's possible with the fees that are there, but with that extra protection, it's not like an extra insurance policy that you're actually paying. Each bank does have fees that they charge for different types of accounts. A lot of banks offer free accounts as well. But as far as an extra protection just for that, no. It's just with opening up that bank account and trusting that bank proving to you that they can be trusted.
So say I know myself, I know how I spend my money, if I'm going to be more likely than not to overdraft my account. How can I comparison shop amongst banks to figure out what's the best based off of my personality and how I use money?
There are a lot of tools online for you to actually do some comparison shopping, but there's nothing better than going to the bank yourself. Finding out if that's the right place for you. Notice if you walk in, how are they treating you? Do they seem to have your best interest at heart? And that's it. Are there any locations that are close to you? Also, if you decide, I don't even want to go into a bank, I'll stick with online banks. You can go to bankrate.com or other websites that'll help do some comparison. It'll tell you if you choose this bank offers this product, This is the fees that are involved in it. And it's also always a great idea to know what fees those banks charge as far as for overdrafting, for sending a wire transfer, for money orders, anything like that. So it's a great idea to know that and do that comparison shopping. And again, you can also open up more than one account with a different bank.
Okay.
So you can do it that way as well. Real life experience by comparing the service that you get. And if you have online, you decide to go online, check out their customer service online as well with a chat feature, phone call. What ways can you get in contact with them, and how do you make sure that your accounts are kept up to date and reported to you?
Now, we have just covered checking accounts, but what other, like, basics? What other types of checking accounts, savings accounts are out there? Like what, depending on where you are financially on the spectrum, is there a lot of different things out there?
Each bank offers something different. And we hear about the basic checking, savings accounts. And each bank can say what features they offer for different accounts. Some accounts will require you to have a minimum. So that means that you can't open the account unless you have a minimum of, let's say, $250. Then there's some that have a requirement for you to keep $2,500 in there. So it's really just seeing which type is best for you. There's some that will offer interest, which means every time we put money into the bank, we're technically lending that to the bank as well. So the bank is saying, for you letting me watch your money, and I'm going to help you just a little bit, make it grow, so you'll get interest on that as well. So that's another feature that you can look for and see if those banks offer that. Banks also offer other products such as CDs. You can look at money market funds. There's so many different products and services that a bank can offer you to help you invest and save at the same time.
Okay. Now, what is that final tip that you'll give anyone who has not made that move to open up some type of bank account? What would you say the first step they should take?
I believe that you should go with whatever bank you feel best at. But if you are a person that does not trust the bank, you're looking at doing a Cash App, Venmo, using all of those different services, keep in mind your money is not safe there. There is no insurance, and Venmo can shut down and take your money with it. Oh, wow. So you want to keep your eye on what's in those as well. Make sure you link it to a regular bank account where those funds can be transferred right away, and they are safe. Also keep in mind, as the economy progresses, as technology progresses, we were able in the past to do what we would call check kiting, meaning that we know we don't have the money, but we'll make the payment anyway in hopes that the money comes in. Also keep in mind that as technology advances, that will not be longer, because now instead of us waiting from, if a bank closes on Friday, it's going to open on Monday, so we have time to get that money in there, things will start to get to 24 hours. Where we don't have that lag time. So discipline yourself to be prepared.
Perfect. Thank you so much for these tips.
Hi, I'm Ryan G. I'm the host of Tweeners. This week on Tweeners, we'll be talking about the music industry with a special guest, Mark Sanders III.
Whoever your favorite artist, look up how to make those beats.
You can catch my show Friday nights, 7 o'clock. CanTV 19, CanTV.org, and the new CanTV Plus app.
Tish has helped us understand how bank accounts work, but our money education doesn't stop there. Up next is Charlene Reinhardt, the dividend queen, who is here to help us understand investing basics. Please welcome to the show, Charlene.
Thanks for having me.
Thanks for being here. So as you heard, we talked about checking accounts, basic banking, but what about investing? If I'm ready to dip my toe into there, what should I know?
Yes, so if you're ready to get started with investments, you need an investment account. It's another type of savings account, but you can actually invest in assets that you like, that you believe in, and you could potentially get an extra stream of income from your investments.
Now, with the checking account, if it's in a bank, it's federally insured. Does that work with this type of account?
So with investment accounts, it depends on the type of account. There may be some insurance like SPIC depending on your type of account, but be careful with investing because you could lose your money. Nothing is guaranteed. It depends on the assets you invest in. If the value goes down, well, your money goes down and you could potentially lose all your money in the account.
So for checking, you earn interest if it's an interest-bearing account. What is the same thing as interest? Is that dividends when we're talking about investing?
Yes, that's the beauty of investing. You can earn dividends, and dividends are a recurring stream of income that you can get from your investments just because you are loyal. Think about it like you are shopping. When you're shopping, you're getting rewards points every time you purchase items from your favorite store. Well, the same works in the stock market or with an investment account. If you purchase certain assets, let's say individual stocks, and the company's board of directors declares a dividend, you will qualify for dividends during the next pay period. That could be every month, every 3 months. However often the company pays dividends, you will get dividends. And it doesn't stop. If the company continues to declare dividends every 3 months, you will continue to get deposits in your account every 3 months, potentially giving you an extra stream of income for the rest of your life.
Now, when you say dividends is based off of interest, I mean, how do they calculate what the dividend's going to be?
Yeah, so the board of directors has the responsibility of declaring a dividend. So typically you'll find blue chip companies that are more established, they will pay dividends. Growth companies, many tech companies may not pay dividends because they are newer. They want to reinvest their earnings back into the company. So when you think about a company, they have options, just like a human being has options. A company has options as to what they are going to do with their money. They can reinvest the money into growth in the company, or they can pay a percentage of the income they receive to investors in the form of dividends.
Oh, so it's basically whatever profit the company has, they're saying, hey, I'm going to give a bit of this back to the investors for them investing in me. Is that another way to look at it?
That's another way to look at it. Now, some companies, you may notice that they may not have profits for the quarter and they may be dipping into their cash reserves. So you want to be careful. You want to look at financial statements to see if the company has enough money to pay you and if they are in a position where they have to dip into other sources in order to continue to pay you.
Now, how do I manage that risk? Because like we said, it's not guaranteed. So how do I manage that risk when I invest in companies to get dividends?
I always tell people, start with what you know. Everyone always wants the coolest, hottest stock that's around. That could be a risk if you don't know anything about the company. Look in your closet, look in your cabinet, see what you buy all the time because other people are probably buying those products all the time and they are probably profitable. So that means you could get the product from the company because you're buying that company's products, but you can also get the profits from the company when you decide to become a dividend income investor.
So how do I get started?
Yes, so once you create your shopping list, I like to say that, create your shopping list. It's just like shopping for shoes, right? Create your shopping list, define what you want, set goals, and then you want to open an investment account, or you can open a retirement account to put your dividend investments in. There are a variety of accounts, but first you want to create your shopping list, get your investment account or other retirement accounts, and then add your money to your account and start investing. It's as simple as going shopping at the mall.
Now, where do I find these investment accounts? I'm new to this. I don't know if I go to a bank. I mean, where do I go?
Yeah, so there are various financial institutions that provide these type of accounts. So one, ask yourself, what type of account do I want to have? Do I want a taxable investment account? Now, a taxable investment account will allow you to withdraw your money without penalties. If you have a retirement account, you will be penalized if you withdraw money before a certain age. So you have to think about it. What do I want right now? What am I focused on? And so you can go online, look for traditional brokerage accounts, or you can look for new age accounts that may be more gamified, but will help you make trades better or faster, or just something that aligns with what's convenient and makes sense for you.
When you say brokerage account, what is that?
It's an investment account.
Okay, so just another name for investment account.
Exactly.
Okay, and is that through a broker, what we're calling an investment broker?
Yes, it's through a broker. So they will actually execute the trades on your behalf. You put an order, you request an order, and that company will execute the trades on your behalf.
So if I wanted to invest in ABC Industries, I'll have this broker account and I have $10 I want to invest. The broker account will actually, like you said, do the order. So they'll take my $10, pay it to ABC Industries. They will get the stock certificate and put it into my account. So they do the behind the scenes stuff, but it's up to me to do the before, like have my grocery list, and understand what I want to invest in.
Exactly.
Okay.
You do the shopping, they do the hard part.
Okay, got
All
it.
the technical requirements in order to get the stocks into your account, they will handle.
Now, how many shares of stock should I have, or how many companies should I invest in? If I just invest in one, is that just a bad thing?
Diversification is key, because if you invest in one stock, you're putting all your eggs in that one company. And so what if the CEO changes? What if the company decides to go in a different direction and the stock plummets? Well, all your money is gone.
Right.
But with diversification, you can invest in different industries, different types of companies, so that if one company is not performing well, maybe you can rely on the performance of another company in a different industry to pull up your portfolio during that time. So diversification is key, because you want to be protected. No matter what happens in the economy, you want to know that all of your stocks won't be impacted because they follow the same trend.
So I should invest in multiple stocks to cut down my risk?
Yes, you can invest in multiple stocks, or you can invest in ETFs, exchange traded funds, which is a basket of stocks.
Oh, okay.
So that means you don't have to do individual stock picking and do all the research on your own. You can find ETFs that align with the industry you want, or the type of dividend investments you want to have in your portfolio.
So for example, if I'm thinking about ETF and I believe in ecology and I want us to save the planet, will there be an ETF out there just focused on those type of companies who have that same value system?
There you go. You can look at companies that align with what you want. So when you're creating your shopping list, go all out, right? Think about the things you buy, but also think about the industries that you like. Think about your values, what matters the most to you, and find companies that match what you want. That's building a relationship.
Okay. So say I'm new, I don't have any stock, I don't have a pot of money set to the side where I can just give to the brokerage firm and say, hey, I want to buy these 10 stocks. If I'm not that person, but I do have a little bit of money I can set aside each month for my paycheck, how can I get into the stock market?
Yes, that's a great question. You put it on autopilot. Let's say you have a checking account. You can set up recurring transactions from your checking account to your investment account. Let's say you want to set aside $25 a week every time you get paid to go into your investment account. You would set up a recurring transaction so that it automatically happens. You don't have to touch it. Automatically happens. You build your account. So when you're ready to make an investment, buy dividend stocks, all you have to do is execute your order.
Then how do I know how my stock is performing?
You can look in your brokerage account and see the swings in your account day to day. You can also look and find out more about the company to see how the company is performing, because when you are investing in a stock, or when you are buying in a stock, you're actually investing in a company. So you want to understand the fundamentals, the behind the scenes of what's going on at that company in order to determine if this is a good relationship for you to have with the stock over a long period of time.
So if I'm thinking about investing, what is that first step that I should take?
That first step is to think about what you would want to invest in. What do you buy already?
Okay.
And then set up your account. Make sure that those recurring transactions are taking place. Make it easy. Put everything on autopilot. And then once you have your shopping list, find out, are these dividend paying stocks? If you have dividend paying stocks in your portfolio, you can set up a DRIP. A DRIP is a dividend reinvestment. So you can reinvest all the cash that you receive every 3 months back into the company, and you could automatically buy additional shares of that company's stock.
Okay, perfect. Well, thank you so much. For anyone who's listening out there, those are great tips to get them started.
Thank you.
I'm Connie Lindsay, one of your hosts for Joy in the Breakthrough. On our next episode, Anna and I welcome Reshma Sajani. Reshma is a change maker and movement builder who founded Girls Who Code, and most recently, Moms First. Tune in this Monday at 7 p.m. on CAN TV Channel 19, streaming on cantv.org, and now available on the new CAN TV Plus app.
Are you ready to dive into the exciting world of banking and investing? Welcome to Old National Bank's Banking and Investments 101. In this video, we'll cover the fundamentals and give you a head start on your financial journey. So let's get started. The first steps towards financial success is understanding the basics. Let's start with banking. Banking is all about managing your money and keeping it safe. It offers you services like checking accounts, savings accounts, and loans. When choosing a bank for you, you will want to consider various options of what they have to offer, such as account fees, competitive interest rates, the ATM network, types of accounts offered, and online and mobile features. With online and mobile banking, you can access your accounts anytime, anywhere. It's like having a bank branch right in your pocket. You can check your balances, transfer funds, pay bills, and even deposit your checks using your smartphone. If you've ever had trouble in the past, many people don't realize that most banks offer second chance accounts. These give you flexibility of using a bank even if you may have slipped up in the past. Need some extra cash for a big purchase or an emergency? Banks offer loans to help you achieve your goals. Whether it's a car loan, mortgage, or a personal loan, understanding the terms and interest rates is crucial. Now let's talk about investing. Investing is a way to grow your money over time. It involves purchasing assets like stocks, bonds, or mutual funds with the expectation of earning a return on your investment. When it comes to investing, it's important to diversify your portfolio. That means spreading your investments across different asset classes to reduce risk. I recommend considering seeking advice from a financial advisor to create an investment strategy that aligns with your goals and dreams. Education is key when it comes to banking and investing. By attending seminars and workshops, you can learn about different financial concepts, understand market trends, and make informed decisions with confidence.
Tune in this Monday at 7:30 p.m. for a brand new episode of In My Own Words, featuring my special guest, Executive Director of the South Shore Chamber of Commerce, Tanya Trice.
Nothing good lasts forever, but nothing bad lasts forever also. And whenever I'm going through anything challenging, I remind myself that this will not last forever. This too shall pass.
We've covered a lot of ground, from understanding the basics of bank accounts to unraveling the mysteries of investing. But remember, this is just the beginning. Now that you're armed with this knowledge and understanding, it's time to put what you've learned into practice. My challenge to you is to open or transfer to the right banking accounts for you and start that investment portfolio. Remember, investing is not just about growing your wealth, but also about securing your future and realizing your dreams. It's about setting goals, staying disciplined, and making informed decisions. Embrace the power of compound interest and watch your money work for you. By mastering the fundamentals, you've taken a giant leap towards shaping your own financial destiny. Never forget that your financial well-being is in your hands. It's not about how much money you have, it's about how you manage and grow what you have. Take control of your financial journey, learn from your mistakes, and stay committed to your goals. Keep exploring, keep learning, and never stop striving for financial success. I believe in you, and I'm confident that with these fundamentals under your belt, you're on the path to achieving great things. Now I have a question for you. We have all heard the saying, a penny earned is a penny saved. But have you ever heard the second part? If so, or have any questions about today's topic or past topics, please send me an email to Kimberly@inthemoney.com or follow me on Instagram at Diva of Cashflow. Remember, we are in this journey together.